1 a.m. we'll start the meeting of the trustees of the trust funds of the town of Durham.
Morning, Ted.
Hello, Ted.
Can you all hear me?
Yes.
Yes.
All right. I think the first thing that needs to happen is you all need to vote on the Zoom protocol.
All right, well, I'll make a motion for Ted to join the meeting by Zoom.
Second.
All in favor?
Aye.
Aye. Welcome to the meeting.
And not hearing any opposition, I'll assume we're good to go. All right. Well, good morning, and thanks to everybody for adjusting your schedules so that we can meet on this week versus next, and certainly nobody wants to meet on Labor Day weekend, so it all works out for us. Are there any members of the, I can only see you all at the table, are there any members of the public?
No, not yet anyway.
All right, and then what we'll do then is reserve time late, as we usually do, at 9 o'clock, to see if anybody has arrived to share their input. As per town council, they'll be limited to a 5-minute comment. And then certainly we'll have our advisors, Chris and Will be on about 9 o'clock to go through the quarterly report. We'll certainly make time. Try to have as much time as possible with them to make sure we get through all of that. First item of business is approval of the agenda. Does anybody have any adjustments they would like to make to the agenda?
None for me.
None for me.
Then can I have a motion to approve the agenda?
I move that the agenda be approved.
In a second.
I'll second.
Any additional comments, conversations, discussion?
None.
None. That being the case, all those in favor say aye.
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 Those opposed? Those abstaining? All right. Approval of minutes is the next item on the agenda. It is the minutes of May 24th. We did not have a meeting in June. One, I was away, and I think, Tom, you were down and out for the count, or at least was concerned that you would be down and out for the count.
Right. That was when I thought I had COVID, and thank goodness did not.
Precautions are always good to take in those kinds of situations, so thank you. And so that does bring us to so there are no minutes for the 21st, or whatever date it was in July, June, and then we did not meet in July. So we're looking at the minutes of May 24th, which Alberto had prepared. Now it seems like years ago, but at least months ago. So I guess first thing would be a motion to approve the minutes.
So moved.
And then a second.
I will second to accept the minutes as submitted.
And now any discussion or amendments that we need to make to the minutes themselves? Hearing none, I guess we can call for a vote. All those in favor of approving the minutes of May 24th, 2024, signify by saying aye.
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 Those in the negative? And any abstentions? None. Okay. So we call it old business, but I'm not sure that's necessarily the term that applies. I guess it's, I'm almost of a mind to change that to continuing business. because it's the same two items that show up each time. First one is the Doe Farm and the Land Stewardship Subcommittee. Just trying to think back. In June, the Land Stewardship Subcommittee had a long discussion about bridges and trail upgrades on the Long Marsh properties. They've identified some that are in definite need of repair, and they were looking at various designs. There's been no decisions made about what would be done. They're kind of in a rock and a hard place in some cases where the upgrades are needed, but because we're continually to battle beavers down that way, water levels keep rising, and the solutions, barring trapping out the beavers and relocating them, which is only a temporary solution because they'll be right back. The solutions are moderately expensive in terms of either relocation or a higher grade of bridge. And the problem with the higher grade of bridge is that it makes it easier to use the property, and then more people use the property, and then there's no parking for anybody to use the property. So it's kind of a rock and a hard place, but no resolution on that. So that was I think the big discussion on that. And then while I didn't attend the meeting last week of the subcommittee, I do know there was a discussion about a contract to evaluate recreation use on a couple of pieces of land by an outside consultant to get a sense of what's going on and what needs to be done. And there was a contract for that for a fairly modest amount of money, less than a couple $1,000s. To look at. I think part of it was the Jackson Landing area, and there was a larger piece, but I'm at a loss at the moment to remind myself what piece that was. It might have been one of the properties out towards Packers Falls. But anyway, Sarah Callahan was bird dogging that through. On the Doe Farm front, we did secure a grant from the Lamprey River Association, basically pay the basics of the forest management plan that Charlie Marino is working on. And we also have gotten notification from the Stratford Regional Planning Commission that there's an additional grant to address the climate change aspects. And so both of those things are active, and what I'm trying to get out of Charlie in the next few weeks is a updated proposal and budget that would fall within the range of the amount of money that's available for doing that management plan. Oh, let me just check. Can everybody hear me?
Yes.
Yes.
Good, yeah. So that's what I have to report in terms of the Doe Farm and the Land Stewardship Subcommittee. Are there any questions?
Nope.
No.
All right. Hearing none, we move on to the Cemetery Committee.
All right, well, the cemetery, as usual, has a few things going on. So since our last meeting in May, we've had 6 burials out there and a couple of sales. I've got to go check in the office and reconcile a couple of checks, but at some point there'll be some deeds for us to get together to sign. And then we're still working on the fence that came down in April. I've been in regular touch with the cottages. It needed a bit more prep work for them than they thought. They want to remove some trees out there, so they got a quote for that. And when they get the trees out, they can put the fence back. They did ask for permission to access our side of the fence to help with the tree removal, which I told them was fine, provided they let me know when they're coming so it doesn't interfere with any funeral services. So that's chugging along. I'm sure it's not their top priority, and I understand. But we'll keep moving on that. The other is that on June 20th, I met with the DPW to talk about just general maintenance. I try to meet with them once a year. So Nick and Sam and I sat down and discussed where things are at. As you know, the trash and compost receptacles were destroyed when that tree came down along with the fence. They will install new ones. They're thinking of kind of a different design rather than a kind of homemade one. They'll probably get ones that are pre-made. We did have a discussion about whether or not we should start charging a fee to open a grave for cremains, since that work for the last year or so has fallen to the DPW. And of the burials we've had this year, I believe 3 of them have been cremains. It's not a ton of work, but we probably ought to start thinking about whether it's a good idea to actually, contribute to the DPW's budget for the additional work we've asked them to take on. We also talked quite a bit about planting out there. We don't really have a tree plan, and we also, kind of our rules for perennials are unclear in the sense that it's unclear who is supposed to manage them. So I'll be having a discussion with them about updating the regulations about perennials to make it clear that when you plant a perennial at a grave, it is your responsibility. It's not the town's responsibility to manage the plantings. And then a couple of maintenance items. There's a culvert at the entrance to the cemetery on the street side, but it does need to be replaced. It's failed and backing up pretty regularly. Now, that's something they can handle in-house. It will take a day, but because they'll have to bring equipment in there, they'll have to close the cemetery gates for a day. It's right at the gate, so they can't dig a trench and not close the cemetery. So we'll get that scheduled at a time that's convenient for them, and again, so that it doesn't interrupt any funerals. And then lastly, the wall. As you know, the part of the wall on the Technology Drive side has started to collapse. That wall was probably built at the time the cemetery was open, around 1930. And they've had great difficulty in finding somebody who will repair it. And it's probably a big job. You've got to open up the wall and see how bad the damage is. It's not just patching up the section that's collapsed, it's figuring out how much further back the damage goes. So we're going to work on that, but that's likely a job that's north of $10,000. So we're going to have to put out an RFP and seek 3 proposals for it. So I will keep you posted on that. But there's going to be an expenditure at some point to repair that wall. We can't leave it the way it is. And that is the cemetery report.
Okay. Thank you.
So I have a question on the wall. This is the kind of masonry and stone,
Correct.
similar to what's along the front. It makes the turn and goes up Technology Drive.
Right. This actually is, there's no wall along Technology Drive. This is the one on the front. This is the one that fronts Main Street. And my reference to Technology Drive was just that it's that side of it.
Okay. Yeah, I suspect that wall was put up whenever, and nearly 100 years of snow, ice, and frost heaves and everything else will certainly raise havoc.
Yeah, and that's the side where the water comes down in the winter and in the spring. So it's not surprising that that's the side that has, the frost heave, the effects, has seen the most effects of frost heaves.
I wonder if, as part of that, not only repair the wall, but maybe figure a way to get some water past that wall. Maybe put a French drain or something underneath it and get the water out to the street ditch. might be a way to reduce the pressure on that wall in the future.
That's a good idea. I'll bring that up,
Yeah.
and we'll make it part of
I
the.
wanted to make it a better idea, but it struck me that that might be a way to keep that corner from being waterlogged,
Yeah, no, that's a good point.
from freezing and thawing. On the other hand, for $10,000 goes for 100 years. That's, it's, that's money well spent. Right?
I presume that whatever repairs need to be done to the wall later on will not be any of our problems. Yes.
Yeah. All right. Any other questions for Tom and the cemetery committee?
New.
Yeah.
Okay.
Have our guests arrived from?
Not yet.
Not yet. Okay, then why don't we move on to the new business, which is first the expenditure request. I haven't been into the town hall to see if there's any expenditure requests. I do know that there are a couple of things being sorted out, and none of them are pressing particularly because, in effect, the town covers the cost and then we move money out of trust funds. So one is the school scholarships, and I know that Deb has got, I think, not only the 2024 numbers, but also the 2023 numbers. Again, it's not a huge amount of money relative to our total holdings. It's probably a pretty good chunk of change relative to the scholarship holdings. But once we get back into our regular flow of meetings in September, we'll probably have that to deal with. I'm not aware of any other additional expenditure requests at this time. There might be something in the mailbox, but I don't know about it yet. Let's see, the other item is, any questions on that?
Yeah, it makes sense to me.
Okay. Our goals for 24-25. This is something that we have put off for a bit. And I think the last time, one of the reasons we did not adopt the edited goals that we had was that Tom wanted to include a statement by the relative to the cemetery committee, given that the trustees are part of that cemetery committee and have responsibility for the funds, and Tom is the chair of the committee. So it does make sense for us to include that. And I'm just looking hurriedly through my pile of stuff to see if I can find that updated statement. Unless
I have a draft in front of me if you need me to send it to you, Ted.
that would probably be faster. Does everybody else have a copy?
Yes, I have a paper copy in front of me.
Excellent, okay. Let's see if they arrived.
It is winging its way towards you.
All right, appreciate that. Now the only question, where is it going to land?
I sent it to your UNH address.
Yep, good. Bingo, there it is. Draft goals, PDF. All right. Excellent. Let me just change how I look at this. Now I do a better job of discussing. Okay, so there's just a few little, okay, so it looks like maybe the way it's marked up, looks like the red markup on my, I have a PDF and it's got the, it shows the markup on it. And it looks to me like the red markup might be mine and the blue markup is Tom's.
Yes.
Okay, so has everybody had an opportunity to read Tom's
Yes.
piece?
But may I ask a question just for clarification?
Sure, of course you can. No, you can't, no.
Item 5, we will continue work to create a trust fund to help finance the town's celebration of its 300th anniversary. Can you provide more details about that? I mean, what exactly are we supposed to do?
My memory is that sometime maybe last fall, Mike Everingram suggested that as part of the effort to help prepare for the town's 300th anniversary, that a fund to be created, in this case a trust fund, so that various organizations or people who wanted to make contributions to support that celebration, the money would have a place to go. And so I guess it has not been created at this point, and nobody has come to us and said, yeah, here's a $5 billion check. Where do you want to put it? So I think that's sort of where we are. We're trying to create a vessel into which funds could be put.
Okay, yeah.
You know, we're a ways away from 2000, as it says at the bottom of my Zoom screen, the town is this 300th anniversary is 1732 was the founding of the town. So 2032 is a ways away, but it'll be creeping right up on us in terms of people beginning to plan and think, well, what are we going to do and what's it going to cost and where do we find the money? And if there's any desire on the part of the town to start squirreling away monies, it becomes like a capital reserve account.
Okay.
If people wanted to make donations to that, I suppose, I don't know whether it would have to be a separate one, but in some event, there was an idea that we should be prepared to have a vessel for funds. Does that address your question?
Oh, yes, it does, yeah.
Having said that,
Anything pressing, but go ahead, Tom.
having said that, it looks like Albert's calling attention to that made me notice a typo in that line.
Yeah.
A trust funds. I can fix that on my copy. Do we want it to be a trust fund or trust funds?
Good question. I guess I might lean towards trust funds and strike the A.
I
And
will.
the reason I suggest that is there may be a need to keep separate money that the town appropriates from funds that are donated by individuals and organizations. And we certainly, when we get to the point where we actually create this device, we'll have to come up with some kind of mechanism, this, on the outside chance that you get more money than you actually have to use for the celebration, which pile do you spend it from, and what do you do with any leftover? I think those are questions we can address in the future. But I would go with funds, just to leave us with the leeway to create more than one if that's necessary. If we could do it all in one, not a problem. Does that make sense?
Yeah.
Does to me. I'll make that change and I can send the draft around to everyone afterwards.
That would be great. Thank you, Tom. So with those amendments, I would entertain a motion to approve the goals for 24-25 for the trustees of the trust funds.
I move that we approve the goals for 2024.
I will second that motion.
All right. Any further discussion? All right. They're hearing nobody clamoring for attention. All those in favor say aye.
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 Opposed? Abstained? All right, we are cruising along. Cambridge Trust Garage yet?
No.
Okay. We'll move on to the monthly MS9 spreadsheet. I think everybody got copies of the MS9.
Yes.
Actually, there's 3 documents.
Oh, this is the emailed attachments from Will Fleming?
Yes.
Yeah, okay.
Yeah. So what those represent is first the end of the year 2023. And that was the one that got messed up because somewhere along the way, either Cambridge Trust or the people that actually do the work for Cambridge Trust took some money out of an account to pay an approved bill, and in the process of doing it, took it out of the principal instead of the income. And they're not supposed to do that. So it messed up the end of the year reporting. So for quite a while, and when we submitted the thing for approval, when Mike submitted it for approval, the charitable unit at the state said, hey, you can't do that. Go fix this. Well, it's taken a while to unwind that, and then in the course of getting it fixed, then we ended up with we didn't really have a good starting point for January. So January, February, March, so on and so forth. Several months in a row, we could not have an updated monthly MS9 because the underlying starting point needed to be fixed. So they finally did get it fixed and then caught everything up in terms of all the valuations and whatever little bit of money that moved around. And so what we have now, effective as of July 31st, is an updated MS9 spreadsheet which covers cemetery funds, capital reserves, and the regular trust funds. And so as near as I can tell, those, in my review of them, those things are up to date. And we only had a couple of transactions that affect those trust fund balances, so we're in good shape. We only need, so the state only requires an annual report. So when we get to like January, we'll have a 2024 report. When we get to January of 2025, and I'm responsible for submitting it and attesting under all kinds of penalties that it is a true representation of the financial situation of all the funds entrusted to us. And when they finally did get the 2023 one fixed, which was sometime in March and for April, I was able to go online and make that statement so that they now have an accepted, approved 2023. So the reason we do the monthly one, apparently when there's a requirement that we do it apparently. Earlier this year, in fact, probably at our March meeting, I was given some materials from auditors who were auditing all the financial operations of the town, and included in that was a questionnaire for the trustees of the trust funds, and squirreled away way down inside of that was some question about, well, do the trustees review on a monthly basis in effect, what amounts to the MS9? And then parenthetically it says, as required by law. I said, well, I didn't know that. And I asked Mike about it, and he said he wasn't sure about any particular law, but given the auditor's question, I assume that we are required to do this monthly. And so now that we have updated spreadsheets going forward, we'll be able to look at each month as it goes along and not have to wade through 7 or 8 months worth of work. Happily, we've been brought up to date. So, are there any questions about the MS9 spreadsheets?
No, Ted, and I would like to tell you that Chris and Will are here now.
Great, okay. Are there any additional comments? Oh, I did want to make sure, maybe as part of the meeting here, Victor, if you could work with Will afterwards so you can be on that mailing list, which would make sure that you receive those on a timely basis instead of me trying to remember, oh, I forgot to send a copy to Victor.
Will do.
All right. All right. Chris, Will, welcome. And looking forward to hearing what you have to report.
Good morning. And I noted about adding Victor to the list, so you'll be on that next time. My mistake.
Great, great. All right. Then,
How are you?
Well, thank you. How are you?
I'm doing well, thank you. The next one for Deb.
Okay.
Yes.
I'll make sure he gets it.
Ted, do you want me to leave one for you as well, hard copy?
Ted, Chris is asking you if you want a hard copy of the report.
yes, yes.
I have another one. Perfect.
Do you know where the mailbox is in the town hall for the trustees?
Is that in the room across?
Yeah, I can leave it there because I have to go there after the meeting anyway.
Right, great, thank you.
That way, nobody has to hang on to it to the next meeting. It'll be in the town hall, in the mailbox, and it'll be my responsibility to pick it up when I get back into town. So with that, maybe why don't we do the last little bit of business? We had a discussion a little bit by email of moving the meeting in September to Friday, I think the 20th. Let me check. Yes, only because the 27th will only be 2 days after they replace my left hip. And I'm not sure what condition I'll be in.
Oh, well, good luck.
Yeah. The doctor tells me he's been doing this for 20 plus years and he never had one go wrong yet, so
That's what you want to hear.
that's what I want to hear.
Absolutely.
All right, well, with that, then if Alberto, we would note in the minutes that we're going to meet on the 20th, and then I'll make sure to get an agenda out ahead of time for that.
Okay. Yeah, I'll do that.
Basis. All right, Chris and Will, it's your show for the balance of the meeting.
Perfect.
All we'll do at the end is adjourn.
Perfect. Excellent. Thank you, Ted. Good morning again, everybody.
Morning.
It's good to see everyone. Hope everyone's summer's going well. Maybe I'll kick it off, start with you, Will, on anything administrative, maybe talk about the merger a little bit, and then we'll get into the economy.
Yep. Yeah, just I was emailing with Deb Ahlstrom earlier this week on getting a breakdown. I think Ted was talking a little bit about it as we walked in on the expendable and non-expendable scholarships, just the individual instead of having one line item. So Faster Systems has that request. They're working through that. As you were mentioning before, it took us a little bit of time to get the 2023 MS9s filed with all the corrections and stuff. So now we're getting caught up with all of that, and we should have that report to you hopefully by next week. They didn't give me a deadline, but we're trying to get it as soon as possible. I understand there's some decisions that need to be made, maybe for scholarships based on those numbers. So that's coming. I haven't heard anything else from Deb as far as anything else for the MS9. So I think, and based on Ted's comments, we're in good shape there, which is excellent. Administratively, I don't think that, actually there was a few things just following up from a previous conversation with Ted. With the change of some of the trustees, we just need some updated information for our records. I could send an email out afterwards. We don't have to do this now, but we'll need a copy of driver's licenses. I don't know if you guys have something official that says who the authorized signers are, so the new trustees of the town, or if you have it, that'd be great to have. Otherwise, we can have one of our standard forms, just sign that way. And then the last thing was that letter that we spoke about, Ted, not something that's dire straits that we need today, but the previous trustees had signed a letter basically acknowledging that for the cap reserves in particular, some of the cash was invested, and this is going back 10, 12 years ago. Some of the cash was invested in the market. It's paid off handsomely. It's worked out very much in the trustees' favor. They did that probably because of low interest rates going back at that time frame to get some yield on income cash rather than having it sit there. So just the difference between what the MS9 is going to say about what's expendable and what cash is available versus what the statements say. Obviously, you're going to use the MS9 to make decisions, but it's just an acknowledgement that there is a difference between those two reports. So I'll follow up with an email on those three things, and then unless there's any big distributions or any other expected expenditures for the town, that's all I had today.
I apologize for not, I remember that we had that letter to do, I apologize for not getting it done.
No worries at all. I know we were trying to get together this summer, and then we got our schedules crossed for last month, so happy to be here today, though.
Absolutely. Yeah, the only thing I'll mention now that we're in August is that the merger of Eastern and Cambridge Trust is complete. I'm sure you've seen the Eastern signs on former Cambridge Trust. They wasted no time. It happened that weekend. My wife and I were in Portsmouth going for a walk with our daughter, and they were literally doing the signs then. So it's official. Long time coming. So far, so good. It's really having a bigger impact on the banking side of things. If you were a wealth client of Eastern's, you're having more of an impact over time, much more so than if you're a Cambridge Trust client, quite frankly. Really, there shouldn't be any changes on the town's end, and things are steady as she goes with regard to the management. Will, myself, and we're just moving forward. So it's always nice to report that things are going smoothly whenever you talk about a merger. So that is good. That is good to report. I think it's kind of fortuitous that I'm here today in August and July. We've had some volatility over the past few weeks. I think I'll probably start off talking about kind of what we saw, where we are today, and then kind of get into what we see for the future and get into returns, which are quite good relative to benchmark, but just overall, equities and fixed income are really doing well, and the town is really benefited. So I'll talk about the last few weeks and kind of set the stage here for the heightened volatility that we've seen. So whenever you have a monetary policy that is in flux or about to change, and especially when you're talking about the Federal Reserve, which essentially is the Federal Reserve and for the entire global banking system. Let's be clear. Jerome Powell isn't just setting policy for the states. There are significant knock-on effects to that. Whenever there's a possible change or pending change, you can see enhanced or greater volatility. And go back a few weeks, Jerome Powell was speaking at the most recent Fed meeting in July. No change in interest rate policy, but the minutes and his conference showed that they're a little bit more dovish talking about potential rate cuts in September. Not as dovish as some had hoped. And when I say dovish, I mean more leaning towards a cut, more accommodative policy than restrictive. Hawkish is more restrictive. And that took the market a little bit by surprise, but still there's a fair chance that, reading between the lines, that there would be a cut starting in September. And that would represent a change in monetary policy. It would go from restrictive to restrictive minus whatever that cut would be, 25 or 50 basis points. So starting on the path of moderating that restrictive posture from a monetary policy perspective. And we all know that has huge ramifications for the broader economy, and again, knock-on effects globally from borrowing costs for consumers, businesses, etc. With that being said, the following day, we got a few things occurred. First and foremost, the backdrop of Powell's comments kind of sinking in, okay, not as hawkish, so that was putting pressure on the markets, kind of opening up on that Friday. Then we received a few different reports that looked like the economy was more in trouble than we had expected. We'd been expecting the economy to cool down. That's kind of the base case of this soft landing that everyone likes to talk about. You would like to see a soft landing versus a hard landing. Soft landing means the Fed is able to bring down inflation, cool the economy without going into a recession, and the stock market and markets overall should do okay. Hard landing, Fed tries to cool stocks, right? And so it's a very difficult path for the Fed to navigate. And I remind everyone, when you listen to Bloomberg or CNBC, all these people talking about the soft landing, the Fed's doing a great job. Well, the Fed was 6 months late on inflation. They were calling it transitory for a full year and then they had the biggest increase in modern history, going up 5.25% in a matter of months. At the same time, they have been bleeding off their balance sheet. So instead of quantitative easing, adding to the balance sheet, they've been letting things roll off. Again, restrictive, because that's more assets that have to be absorbed by the broader market, pushes pressure up on rates. With all that being said, I think there's been a lot of kind of complacency, which definitely happens in markets, about the ability of the Fed to navigate that soft landing. So let's move forward. So we have those. So we had some economic data on manufacturing and housing that came in especially weak. So if you were to turn on, Bloomberg, CNBC, you have those same prognosticators talking about the sky's falling. They've been saying that for the last several years. So they're right in tune. They're going to be eventually right at some point. So they're calling for the Fed needs to cut immediately. They need to have an emergency session, etc. Meanwhile, overseas in Japan, the sky really looked like it was falling over there, and didn't think the Nikkei was down 5 to 6% on that Friday, and it was on the backs of this magnificent rally that we see in the stock market, surpassing market highs that have been set in the early 90s, that finally punched through that ceiling, and we're off to the races. The Nikkei had been doing exceedingly well for the year, and that was on the back of an incredibly weak yen. And so while the dollar has been appreciating, the yen has been at multi-decade lows against the dollar. And if you think about it, it's great if you're a Toyota, right? You're shipping your cars over to America, you're bringing those dollars back to a weekend. That's a great for your business. That trade started to unravel, and then you go into the weekend and unraveled further. So the Nikkei was down 5 to 6% that Friday, and that was down about almost 12% that Monday. Huge moves for a developed market economy. So, wake up Monday, you're seeing NVIDIA at the lows off 14%, Amazon, great companies off 10%. You have to sit back and say, okay, what has really changed? And so you had Powell's less than dovish comments. You had some weaker than expected economic data. Okay, is the economy cooling too fast? Has the Fed kept its foot on the brake too long? Oh boy, we got possible contagion with the Japanese market knock-on effects. I can tell you, as a firm, we sat back Monday morning and said, we do not believe the sky's falling. We think this is par for the course. We think that these things are going to happen. You're going to have enhanced volatility when you have these types of changes that affect the global, economy, global system. Things will break. Things will start to crack. But you have to understand what is hysteria, what is factual. And we look back at that and said, we're just not seeing it. You can't make investment decisions off of a few bad economic reports and then all of a sudden extrapolate, oh, we're going into recession here. The Fed's been completely wrong. No one's really been talking about that. Of course, we're going to look at that as a data set and compile more information. Fast forward Monday, the lows were set in the morning. Terrible. I can tell you, I was in my client accounts adding to equities where I had cash available, or if I was dollar cost averaging into the market. So we were aggressively, buying there, and we were not making, any significant changes to the town accounts. What has happened since then? The next day, we got an immediate 75 basis point. Okay, those people stopped being paid attention to, right? And so we started, normalizing. And so we had some choppiness, but we had the bond market, which I didn't even mention. We had the 10-year go from about 4% down below 370 a day. Massive moves on the bond market, huge fluctuations. Those normalized as well. Where I'm going with this is we're in that time period where you are going to see some of those gyrations as the Fed shifts its monetary policy. And the reason why you're seeing it all at once and why these moves are so aggressive is that we are in times that we've never been in before. We have algorithmic trading, electronic trading. You can trade at all hours of the day, and every news report, everything gets cycled, and whether it's human or it's a computer, people are making decisions in real time. And those things can move markets very quickly, and then it's compounded by the seasonality of the summertime, because there's less guys like me working in the summertime, sitting behind my computer and trading accounts because you're on vacation. You look at it, you look at the just the volume of shares traded during the summertime, it goes down significantly. So it magnifies those moves of the market. As we move forward, our view hasn't changed. We still think the Fed is doing a good job. Inflationary data that's come out over the last couple of weeks has looked very promising. It continues to move lower. We do believe we are going to see a rate cut at September. We do believe it's time. We also think that given the magnitude of the decline in inflation, given the signs that the economy is absolutely cooling, especially on the manufacturing industrial side of the US economy as opposed to consumers. We had a very nice retail number that came out yesterday in July, far exceeding expectations. So that is a good thing. We also think we're also taking the politicalness out of that rate cut in September. And I think I've talked about, I was in the camp, they're probably not going to start till November after the elections. They don't want to appear to be, political in nature by cutting. At this point, it feels very much that September is the right time. In politics, you really can't make an argument. This is based upon really hard economics. So it'll probably be a 25 to 50 basis point cut. We'll see how the data comes out between now and that September meeting. And then, between now and year end, we're probably in the camp of between 50 and 100 basis points, again, depending on that economic data that we're watching closely. We're watching closely the labor market. That was another factor into this. On that Friday morning, we had the unemployment number for the week. Unemployment claims spiked. That threw some fears into there. So it was really a perfect storm. Since then, the last 2 weeks, the numbers have come down and actually exceeded expectations on the downside. And so, things look good there. One of the things you have to pay attention to, and the last thing I'll say on this, some of the data that we're looking at, the unemployment rate is now up to 4.3%. And we bottomed out in the mid threes. And so normally you'd say, okay, well, that looks like weakness. Well, one of the good things about that number, we actually jumped from 4.1 to 4.3, and that headline, can be scary at what's going on here. Well, if the underlying data is the participation rate is actually going up, more people are coming into the labor market, and that is absolutely a good thing. However, if you look at the number of job openings that are available now versus maybe 6 months, a year ago, significantly lower. So we're talking about 8 to 9 million openings versus at the height, 12 million. So significantly less jobs. So we're seeing that much more normalized ratio of those looking for work and those the job openings. Again, good for inflation, not as good for those that are going and looking for work. But that's more normalized. That's actually what we want to see. So that 4.3% unemployment definitely shouldn't be scary. It actually was for a positive reason. We want to see that labor participation rate. And we're actually at the highest labor participation rate, I believe, for 25, it's actually in here, 25 to 54-year-olds in over 2 decades. So that means we're actually getting those people into the workforce. And that is a really good thing. We need that. We've talked about demographics in the past. Where does that leave us as we go forward here? we believe we are in a time where, you know, the economy is continuing to chug along, albeit cooling. We think bonds are positioned to do well. I've talked about increasing our duration, which we have been slowly doing for our accounts here. The more duration you have, the better your bonds will perform when rates do go down. We were close to about 2 to 2.5. We're closer to about 3 to 3.5 between. I want to see both of those accounts closer to 4. And what we have talked about before is, because a lot of these bonds were purchased back when rates were near zero, there are some losses on the principal amount. And so I have been very hesitant to realize those. So, you know, we're slowly, methodically getting there over time, but not trying to take those principal losses on those bonds. So we are getting towards 4, and hopefully by year end we will be there. For duration, for fixed income. In terms of performance, if you look at page 1 in the report here, I won't go through this. This is really, you know, for you to take and look at. I'll point out some of the highlights. But if you do look at this table here in the bottom right-hand side, you'll see, and this is as of 7/31, you'll see year to date, U.S. large cap stocks been the place to be, up 16.7%. You'll see growth continues to outperform value, but look at that 1 month number. Look at significant outperformance for value. So if we had been having this meeting in July, we would have been talking about, wow, growth is really crushing it again after a 2023 that saw growth significantly outperform. We're seeing that come back in. Big piece of that is financials have started to come back to life. And if the Fed is going to navigate that soft landing where you have a cooling economy but still growing and rates coming down, great for banks, great for small caps if they are able to navigate that. If they go too far, go into recession, terrible for both. So that's where you say, oh, you know, these look very attractive, but at the same time, you don't want to get too excited, because if we do go into recession, you know, typically they will be the first ones to sell off. And that's why you saw banks really going and accelerating into the volatility we saw 2 weeks ago, and they sold off pretty quickly. But it's good to see the value catching up. We do have the value tilt with our large cap stocks. And again, on a year-to-date basis, you could see the fourth line down, the MSCI All Country World Index ex-US, that's our international benchmark, up 8.43%. We've talked about this time and time again. International, it's a diversifier. We want to be there. It will have its day. It hasn't had its day in quite some time. We are underweight, closer to about 17.5% of the equity allocation, and that has been a very good thing. Another good thing has been our diversification on reducing our Chinese exposure. The Chinese markets have really had a hard time this year after a nice pop early to start the year. They're in some really troubled times. Some great reading if you were just to Google Chinese bond prices. Right now, they are trying to avoid what we just went through last year with regard to banks, insurance companies, and whatnot, loading up their balance sheets with these ultra low yielding bonds, because there's been a huge rally on Chinese bonds. And whenever you see a huge rally in the bond market, that is a flight to safety. And that is a sign that your economy is not doing too well. Because if your populace, and your businesses and investors are flooding to bonds, why aren't you buying equities? And so that's an indictment on the overall economy. And what that does is it puts downward pressure. So bonds are rallying because everyone's buying them, puts downward pressure on yields. And so banks and other institutions with liabilities are forced to purchase them. But what happens, and we saw this, we know what happens, 2 to 3 years from now, when those rates start to rise, you have liabilities on your balance sheet because those assets are now trading at losses. And then you have to look at capital ratios, and then the math doesn't work out. And then you saw what happened to Silicon Valley Bank. You saw what happened to First Republic. The Chinese are actually, good for them, looking at that and saying, holy smokes, we want to avoid a situation like that. Very much easier said than done, because you're trying to, also, mitigate and change consumer behavior, which we all know is incredibly difficult to achieve at any level, even the Chinese with their authoritarian regime. So just a little tidbit overseas, that's been a good thing. And again, on a 1 month basis, fixed income was a good place to be. Our benchmark, the intermediate gov credit, was up 1.88% in a month. So a big move there, and that's with rates coming down. The inflation numbers are looking good, potential rate cuts. That's going to be very good for our fixed income allocation for the year, about just over 2.25%. I'm going to pause there because that was a lot. Any questions on what we're seeing, and then I'll just quickly touch on our outlook before we get into the portfolios.
Yeah, I guess if you were a betting person, federal rate adjustments in September, you had a range of 25 to 50.
Yep.
If you were a betting person, where would you be, on the high end or the low end of that?
Probably the low end, Ted, and the reason is, especially with, I might have been on the opposite end yesterday before the retail sales number came out. We had a 1% move in retail sales for the month over month. Huge move. You saw Walmart report yesterday morning. A holding we have has done phenomenal for us, new all-time high. We talked about what are going to be winners, what are going to be losers. Walmart is a great resource for us to look at and say, okay, how's the health of the consumer? Not only are we seeing that overall number, but Walmart's a great catch-all, and they're also benefiting from those that are struggling and looking for a deal. And so you are seeing the weakness, but you are seeing resilience at the same time. So I'm probably kind of split the difference, probably 25 in September, maybe 50 before year end. So we'll kind of come in about 75 basis points for year end. I had to make a call now, and with the Fed, every time the Fed opens its mouth, makes a policy decision, minutes, the little dot plots that they do, it's always signaling messaging. So if they do 50, then people are going to say, holy smokes, the economy's worse than we all expect. Or they do 25 and they say, oh, that's not enough. You can never please one party, but having the consistent message is so important. And I think after their last meeting and after the data we've seen, except for a little hiccup that I was talking about, I think 25 basis points makes sense. You've started it. It can, they'll stay data dependent. If they need to move 50, they'll go from there. But yeah, I don't know if you.
Well, also the 25-50 debate, I mean, we could talk about that for a while, but I think it's more, the important piece here is they're starting to ease.
Yep.
So whether it's 25 or 50, it's once they begin this phase, they're probably going to be doing something every meeting, every other meeting. So it's the beginning of the next phase of, basically unwinding what they've done post-pandemic. I think that's really the key here.
Absolutely. Yeah. And I think, it's not as impactful here. I mean, we keep our cash balances pretty low because we want to stay, invested, and we have liquidity if we need to raise it in the fixed income. But, we talk to clients all the time. I think we've all gotten used to these nice money market interest rates that we all have hopefully been taking advantage of at our different institutions, CDs, etc. Those go away very quickly when the Fed starts to cut. So, just to be mindful, you want to make sure you're planning for that eventuality, because rates, on the 2, 3 to 5 year curve have already started to move pretty aggressively, just on the notion that the potential rate cuts are coming. We have been trying to take advantage of that by making sure we're ahead of that. We don't want to be on a back foot trying to react to the Fed. We want to make sure we're planning for that.
Yeah. Hence the increase in duration.
Yes. Yes. Absolutely.
That makes sense. Thank you.
Yep. Yeah. And so for from here to the end of the year, we think bonds will do well with that heightened volatility. I mean, there are so many things that I could mention that could potentially be drivers of volatility. We all know what's going on in Ukraine and Russia. We've talked about that for a while. I mean, pretty dramatic deal there with going into Russia. Mm-hmm. Could that be a bargaining chip to bring peace? I don't know if anyone saw the comments from the, I don't know if you call him the president of Belarus. I don't know if he qualifies as president, but the head of Belarus calling for peace. That was pretty shocking to see him come out, pretty staunch Putin ally. Not really sure how this stuff comes about, but I guess Joe Biden was pontificating about potentially giving the Ukrainians longer range cruise missiles for the F-16. okay, let's do it. Let's get moving here. You know, it's just like, oh, well, maybe we'll give it to, maybe we won't. So, you know, it's a very interesting situation. But, you know, everyone's been worried about the Russian red line. Doesn't seem like they really have a red line, but it does feel like there has been some momentum towards, you know, potential. So that would be a big catalyst, positive sign. Obviously, things could go the other way, and we're watching that. We're waiting for the Iranian response to the Israeli assassination that took place in Tehran, taking out a top commander there. So there's potentially, we're staving that off because of diplomacy and a peace deal, a ceasefire in Gaza. You know, TBD there. Obviously, that could be another firestorm, and then really. Haven't talked about it at all. We do have an election coming up. This is the last time, we were here. Joe Biden was the candidate, and now Kamala Harris is. So for the Democrats, huge swing there. I put it in here, issues to watch. I mean, we have Donald Trump with a 6-point plus lead in the polls. In the swing states, which really that's all that matters. You can look at it from a national race, but swing states +6, that is dead heat now, absolute dead heat. And so that is something we're watching very closely. We have huge things up for, everyone likes to talk about this, the most important race. Okay, well, what's going to happen next year? We're going to have tax policy that's going to impact us for the next decade being discussed on a personal side. So huge moves, huge issues in terms of where we are taken for these different geopolitical issues, our military, national defense. So we're fleshing all those out. Each candidate will have certain sectors that will benefit from the presidency, but most importantly, and we've talked about this before, what does Congress look like? What is the composition of Congress? Can certain things get done? They talk about on the campaign trail. And again, we were talking a month ago before the change happened. I would say, boy, this is looking pretty positive if you're a Republican, if you're looking at some Republican-leaning, sectors. It looks like they're going to be able to get a lot of what they want to get done. That's completely changed. And so now we're looking at, very much divided government, regardless of who wins, the presidency, unless that does change. We know debates have a way of changing things. We saw what happened with the Trump-Biden debate and what ensued there. So, we do believe that there will be a debate at some point. I don't know where the latest is there. I know there's been some haggling on that end, but that is something we're watching very closely. And again, volatility. I didn't mention the assassination attempt. The amount of things that you read in the paper, and I'm sure you've seen this, the Iranians hacking into different offices, they had hired an assassin. I mean, the stuff that you talk about, it's like you just kind of, okay, what's next? I mean, there's so many things that could potentially have an impact on markets, but overall, when we go back to at Cambridge, and I think you all know this from working with us for a while, we go back to fundamentals. That is mostly noise. We want to understand it, be prepared for it, but we want to know what's coming down the pike and looking at, economic fundamentals more than anything.
Just a question.
Yeah.
My ears got perked up because you look at various things.
Yes.
And regarding, these tech entrepreneurs, so there's one group that, pro-Republican,
Sure.
and another group that, pro-Democrat, and, their clashes have become public.
Sure.
So I wonder if you've looked at that and see if there are possible effects on the tech sector.
Yeah. I think it's a great point. I think I was reading a great article on this, probably in the Journal a couple months ago. These companies, you almost look at them more, or should be looking at some of these companies like countries. I mean, you look at Microsoft, for example. The company's worth over $3 trillion, more than most Western economies from a GDP standpoint, combined. And so what they're doing is a big deal, right? And so you hit on a note here. A lot of these tech guys have been rallying on the backs of, it's almost become the Republican Party has become pro-Bitcoin, the Democratic Party is anti-Bitcoin and more regulation. So it's very interesting to see some of the money being thrown around on both sides.
Yeah.
And, you're looking at the Department of Justice right now is actually looking at Google or Alphabet's and potentially for anti-competitiveness and potentially breaking them up. I mean, so very different kind of a view from a Democratic to Republican Party, Well, I can bet you one thing. Maybe Alphabet or Google wouldn't be targeted under a Republican administration, but I bet Facebook would. So, it's very interesting to kind of see this, but it matters. There's a lot of money. One of the things, I'll pivot on that question, one of the things I'm actually very hopeful for, just as an American, I hope this is bipartisan, is that, I don't know if anyone is familiar with Anduril Corp, Lucky Palmer. He is the inventor of Oculus, sold it to Facebook, sold it to Facebook, made billions. He's created this company, this tech company called Anduril. They're working on a lot of autonomous weaponry and trying to sell to the military. And what you're seeing finally is that the military, because they've whittled down our industrial base to basically 4 companies, that the primes, Lockheed, Boeing, Northrop, General Dynamics, you're starting to see some of these tech entrepreneurs, now that the cost of capital has gone up, and I think Lucky said it best when he said, now people are actually looking at real world problems, not just trying to figure out how to deliver food the fastest. And so they're pouring resources into this fight, what's going on in Ukraine, China, and so you're seeing the innovation that the DoD hasn't seen in a long time because it's so hard to move some of these big manufacturers. So it's very interesting. You are seeing the factions playing out. There's a lot of money being splashed around from Silicon Valley on both sides. And again, there's going to be winners and losers there dependent upon it. I mean, we have a third-party strategist we use research for. They have different lobbying baskets. And so you have your Democratic stocks, your Republican stocks, and you just follow the money. Who's lobbying, who's spending the money. And if this basket's outperforming, that means that Kamala Harris is doing better in the polls, or this basket's doing better. It shows that Donald Trump's doing better, and there's a direct correlation there. And so we never like to say, okay, well, we're going to be putting money over here because we think Donald Trump or Kamala Harris is going to win. After 2016, we know that that's not a good idea, right? Everyone thought Hillary's going to win. But it's very important to understand, and then after the election to really look at our portfolio and really help us make decisions. Absolutely. Great question. Any other questions before we move into the portfolios? Okay. Are all net of our management fees. So you can see the top left, you can see the total pie here, how we were allocated at the end of July. You can see our equity exposure was about 40%. Fixed income, our bond allocation was about 56.5%. Our cash allocation was just over 2%. And the good news is on the asset growth page going back a ways here, it's nice to see that we're doing well over that period of time. We had a little bit of a hiccup in October of 23, but we've now rebounded since then. And you can see over a 1-year period, we're up 10.04% net of fee, which is phenomenal given our asset allocation here. And there is some noise if you're going down the beginning market value, 2.656 million. That net contribution and withdrawals line, just to make sure everyone's familiar with how that's computed. Typically, all that number is money moving into and out of the account. So if there are additions coming in that the town is sending or distributions going out, that will plus and minus. Also, our fees come out of there. The reason why it's a large positive is because of the agency funds that were deposited in with that account no longer existing. So that's all that is just an accounting function. What you really want to pay attention to, and this is what drives the ultimate total return number of 10.04%, is the income earned. So that's the dividends from the stocks, the interest from the bonds of just over 110,000 over the past 12 months. And then the market appreciation, whether that's mostly from the stocks, somewhat from the bonds more recently, of just over 243,000. So, very, very nice returns. On the next page, very similar in terms of allocation. On the left-hand pie chart, predominantly US. We've been there. We've been overweight. That has been a good decision. You can see about 83, almost 83.5%, and the remainder in international, with only about 5% in emerging. On page 4, 90% of our fixed income is invested in individual bonds where we control the duration. And in this account, you can see it's pretty much evenly split between government agencies and investment grade corporate debt. On page 5, which is the most important page that we go over, If you look at a year-to-date, we're up 6.56% through July. And again, that's a net number versus the benchmark of 6.27. So slight outperformance after fees, which is great, especially since it is after fees. On a one-year basis, up 10.04 versus about 9.67. Again, net number. On the fixed income side, year to date, we're up 2.25 versus 2.37. We did give back some during the month of July because our duration wasn't at target. We were below duration. That has helped us considerably since inception, but it has hurt us as rates have come down. We are trying to move on kind of alleviating that over time. So I have sped that up with the Fed, potentially cutting rates as early as September. You can see on a one-year basis, a very nice fixed income return at 5.8, pretty much in line with benchmark there. On the equity side of things, on a year-to-date basis, the account's up 13.89% versus our blended benchmark of 12.17, having that growth tilt relative to benchmark. So we're value tilted overall, but having a little bit higher growth percentage versus our benchmark. And the analysts have done a great job. I talked about Walmart, Broadcom is in the portfolio. Both have done very well. So they've done a great job just purely picking stocks as well. And then on a one-year basis, we're up 18% versus about 15.5%. So some great numbers there. And they continue. Any questions on this page?
That looks good. Thank you.
Perfect. On page 6, really what I wanted to talk about here without going through the bonds is that duration number. You can see we're at about 3.58. And again, I want to be closer to 4, if not higher than 4, towards 4.25. We'll get there over time. On page 7, this is just a nice FYI chart, kind of showing how we're evenly distributed. We're building out the longer end of our bond ladder here. And we really don't go past 10 years on our individual holdings. All right. I will go right to page 14 and look at the trust funds. You can see this is going to be very similarly allocated on the top left-hand side. Equities at just over 40%, fixed income at just under 57%, cash just over 2%. And again, the same story on the bottom right-hand side in terms of the composition there. The net contributions and withdrawals is going to be a large number due to the agency funds addition. And you can see the income of just over $28,000 and the market appreciation just under $66,000 and our total return during that period of time of 9.66% over the past year. The biggest difference between this account and the capital reserve is going to be in the fixed income. We're closer to about 3 years duration. That hurt our performance in July more so than the cap reserve, which I'll show in a minute. Page 15, very similar story. Don't need to look at that. Same as the cap reserve. Page 16, very similar numbers. Year to date, 1 year, we're pretty much in line with benchmarks there. But I'll point to that 3-month fixed income number coming in at 306 versus 3.93. So you can see where not having that duration exposure, being short, hurts on the upside. Now it's the same on the downside. So if we were to see rates go the other way, we would have outperformed by the similar magnitude. But overall, we're in line on a 1-year basis, and that's modifying similar equity returns to the capital reserve account. You can see on page 17, duration is at 307, as I was alluding to. And last but not least, we will look at the cemetery funds on page 25. And this account is a little bit more aggressive, has a little bit higher equity allocation. So we're just over 50% equities, 46.5% income, fixed income, and about 2% cash. Over the past year, we're up 9.75%. We're utilizing ETFs in mutual funds for this due to its size. You see on page 26, very similar in nature to the other two accounts in terms of our domestic similar return. So year to date, up 6.82%. We are slightly trailing on that benchmark, and that had more to do with the allocation being slightly underweight to start the year on equities. We are now kind of in line at a neutral stance. But you can see on a 3-month basis that fixed income, which we're using funds that are pretty much tracking the index, we're right in line there. So we have a higher duration, and we captured the majority of that alpha. But the big difference between this account and the other two in terms of performance is we're not getting the outperformance in equities like we are in the other two. Our team's done a great job on the individual strategies, and the couple of funds that we're using are more like tracking the index. Other than that, that is everything I had for you guys today, unless there are any questions.
Just, out of curiosity,
Yeah.
asset allocation for the cemetery funds,
Yes.
you said is heavier on the,
About 10%.
yeah, I mean, any particular reason? I know it's within the parameters
Yeah.
of, the
Yep.
ideal,
Yep, absolutely. No, it's a great question.
Yeah.
So that's more defined by you, and between our consultation and the investment policy statement that is signed by the trustees. And so I recall from the last time that was revised, we looked upon the cemetery as longer term funds, really not a large draw. We can have a little bit more exposure for growth. And that's why. So a little bit more conservative in the trust funds and in the capital reserve due to the nature of more frequent distributions and quite frankly larger distributions. Yep. I don't know when the last cemetery distribution, you would know that.
It's been a while.
Yeah, so then that's why we have we can take a little bit more risk.
Yeah.
But again, that is much more us taking marching orders from you in terms of the investment policy that you set, and then we stay with it.
Okay, thank you.
Absolutely.
Are there any expected distributions across any of the accounts, let's say from now till year end, that are known at this time?
Well, we were just talking about a possible cemetery distribution, believe it or not.
There you go.
We've got a collapsed
course.
wall out there.
Oh.
So that could be, throwing numbers at a dartboard, $10,000.
Okay.
And I don't know that it'll get done this year.
Okay.
But we're going to have to seek bids and, sort of see what happens. But,
Okay.
yeah.
Well, let us know as soon as possible, and we could do something where even if you have a rough estimate, it might make sense to, freeze that liability, and if it's 6-9 months out, just take out a treasury and have it sit there. Just
Okay.
because of what I just talked about with volatility, we have a little bit higher equity exposure. I would hate to see the wheels come off in a few months, and all of a sudden we need to take 10,000 out of an account that we haven't taken.
Would that come from the cemetery? That might come from the trust funds though, right? The cemetery improvement sub-account?
Good point.
Yeah,
It's
probably
probably not
wouldn't
going to, now that I think about it, it's not going to come from the trust, is it?
Yeah.
It's going to come from the improvement.
Probably the trust
Yeah.
funds, yeah. Because cemetery is usually for the individual cemeteries, unless there's an issue with that. But if it's
You're right.
more
Yeah.
general, yeah.
My apologies. I wasn't
no,
even
it's
thinking
okay.
about that. Yeah, we're not going to make a withdrawal from
Either
that
way,
account
let
at
us
all.
know ahead of time, and
Yeah.
if
Yeah.
something needs to be raised.
Absolutely.
But that account should have enough cash to cover, just
Yes.
as a running cash
Yep.
holding.
I know we can also anticipate some money coming out of the scholarship area. And I don't have a ballpark number for that.
Yep.
But as soon as we find that out, we can let you know
Absolutely.
Yeah.
whether it's $5,000 or $25,000 or whatever the numbers
Yep.
are.
Yeah, I think Deb was asking for the breakdown this week, so we're working on getting that from Faster Systems. So you don't have just one line item, you'd have individual scholarship breakdowns. So more to come on that, hopefully by next week.
Okay. Yeah, I don't have any additional questions.
Me neither.
As usual, an incredibly thorough tour of the financial markets. Thank you.
Absolutely. Absolutely.
Thank
It's
you
always a pleasure, and
Chris does a great job.
well,
So
Yeah.
I assume that as things go forward, with your merger, we're going to end up with a new secure account that we have to sign into?
No. So interestingly, that they Eastern Bank, our employer now, purchased Cambridge Trust for its wealth management division. So even though they acquired us, they're folding into us on the wealth management side. So like we're saying, there's no change to your platform because you're an existing client. We use SCI as a custodian. There's no change there. On their end, there's some changes. But to your point, Ted, the online platform will not change.
I think the biggest change you might have seen is when I sent the email securely, it was a different way of accessing it. That's because we moved on to Eastern's email. So I think that might have been the only thing that I've noticed that's impacting the, this relationship right now is just a different way to access emails.
It was a slightly different interface, but it worked pretty much the same.
Awesome.
No issues. So.
Perfect.
All right. Yeah, every time one of these things, got learn new tricks to get inside and actually good to hear that there'll at least be at worst a transition.
Oh, yeah.
Won't happen instantaneously.
Yep.
All right, any additional questions of our advisors?
No.
I'm good. Thank you very much.
Perfect. We're just going to get Victor's contact information, make sure we...
I have it actually.
You have it? Okay,
I
perfect.
just forgot to put it on the last email, so
Perfect.
I'll get you on there.
Okay.
But thank you, everyone. I'll send out an email, like we said, just following up today's call today or maybe Monday. I'm traveling today on getting some of that information, and then we can go from there.
Sounds good.
Great.
Enjoy the rest of the summer.
Thank you, gentlemen. You too.
Have a nice day. Bye-bye.
Gentlemen, appreciate it very much.
Take care.
All right, we appear to have reached the end of our agenda. Is there anything else for the good of the order?
No, and I'll note that no members of the public showed up, so there's no public comment.
All right. Therefore, at 9:53, I will entertain a motion to adjourn.
I move that we adjourn this meeting.
I will second that.
All those in favor say aye.
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 All those opposed are welcome to stay there.
So do I hit the gavel to end it?